Good morning, it's Harvey Jackson. Just going to get through some S&Ds, a couple different looks at it um, for canola and the fragile ceasefire and how that's affecting the markets as well. Um, uh, Here's just a different look at S&D as well. And um, Brian put out information just basically saying seeded acres is following the StatsCan and the crush at 13.9 and 8 million exports. With that would leave you at 1.8 million metric ton carryout, or 8%. And I'm thinking that there's going to be more acres, and I have a lower expectation for yield, and basically come up with a very similar number. 2.6 million metric ton carryout has to get chewed through. This might be a bit ambitious for crush capacity utilization, but when you see like $300+ crush margins, um, the capacity is going to be used and sold, that oil and the meal. Ceasefire at risk after U.S. Seizes Iranian ship. Iran shuns peace talks. So Tehran says that there is no plans for now for further talks with the U.S. as they're both, blocking the strait right now too. Pakistan security forces says Trump told U.S. that blockade is obstacle in talks. U.S. Marines board the Iranian ship. Iran vows to retaliate. Pakistan prepares for talks as ceasefire expiry looms. So here's Josh Linville just talking about how many bushels it takes to basically pay for fertilizer, and you can see we're back at that point that we were with a previous year there. And but the futures do look like it's going to be lower, but well, hopefully we can get there with increased prices and decreased urea. Well, here's Clownshow Carney talking about his new world order, basically warning Canadians that we got to stop doing business with the U.S. and that partnership is way too deep and too entrenched. It's like 80% of our business goes there.
As I said earlier, is more dangerous and divided. The U.S. has fundamentally changed its approach to trade, raising its tariffs to levels last seen during the Great Depression. Many of our former strengths, based on our close ties to America, have become our weaknesses.
Yeah, our relationship is a weakness. What an idiot. Um, so you can see here just how he's such a hypocrite when he's talking about how U.S. is an issue. He's got 91% of his personal wealth is sitting in U.S. holdings. His kids go to U.S. universities. Diana Carney, his wife, is still collecting checks from U.S. corporations. If the U.S. is such a threat to Canada, lead by example, liquidate, sell your stocks, bring your kids home. You can't lecture us on independence while your family future is built on the American economy. What a hypocrite. Yeah, so liberals don't care about your vote because they basically been backroom deals to get his majority. Quick look at the weather. So wind is basically making the red flag warnings, but then the frost is building over here. As you can see here, you see it's cold and then moving over. Here's the cold right now, and it does keep shifting, right? So looks like we're due for some more snow in the north, Saskatchewan and Manitoba. Quick look at the market here. Canola is up 750 on May, and we're getting close to the expiry of that contract here now too. So July is 718.70 up 670. November is up 620 at 717. Rapeseed is up $3.50 at 507. Soybean oil is up 3/4 of a penny at 68.92. Palm oil is up at 69 ringgits at 4,455. And your crude oil is up $5 at 88.94. Brent is up $4.81 at 95.19. And diesel fuel futures in New York is up 17 cents at $3.47. Soybeans unchanged. Minneapolis up 3. Hard red winter up 10. Milling wheat is up $1.75, and corn is up 3/4 of a penny. Canadian dollar is just slightly down. Let's just have a look at the comparisons of the oils and the seeds here. So Palm oil was leading. Now it's soybean oil. Since the beginning, before the war here, up 13%. Palm oil has fallen back to 9.4%. European rapeseed is up 4%, and canola is only up 1.72. So it's not really a war premium at all. Have we seen our seasonal? I guess is the question. Here it is, just comparing your diesel fuel and your West Texas. So New York Harbor diesel fuel is up 45%, and your crude oil is up 35, and then your soybean oil is up 14, and then canola is up to 1.7 again, and soybeans basically up a fraction of a penny. Just showing this, your seasonal short, seasonal long, where positions would have come off using slow stochastics. So this is May to October, and then October into current. And you would be sitting just shy of $200 a ton if we had just played the seasonal tendency here, using other indicators of when to get in and get out. Canola basically just tracking sideways, and still, so this is the July, still supported from the previous lows that we've made. And November is the same idea. Rapeseed is supported, basically going sideways here as well. There's only a $73 differential between European canola and canola in Canadian dollars. I think that there's still going to be canola leaving this, going east. That's pent up. It's going to be going out the St. Lawrence into some of the Europe. Soybean oil still chopping along sideways here. Still haven't broke out above that 70-cent mark. Soybean futures. Big nothing sandwich, just keep on trading sideways here. Crude palm oil looks like it's got some sort of support here as well. Your crude futures is now up on the day, and still looking to fill that gap at some point. We don't know when that's going to fill, and the same thing with the Brent. And then your diesel fuel, you got a gap here too. So if we can get down into, it'd be nice to even just get to $3 area, even though that doesn't sound like we can get there. So huge uptrend, and then see if we're going to take a bit of a pause or a break here. It's not making things, if we're going to follow Carney's New World Order, and we're going to be exporting to everybody else but the U.S. What a brain dead thought, but they're paying more as well, and you export more when your dollar is more expensive against everybody else's. U.S. dollar. Sitting around that 98, all the moving averages or short-term moving averages are above that index. So here's wheat, getting back to the highs that we've made. Looks like a triple top here so far. Need to break out, and the same thing with your November or December contract, sitting right around that $7 futures mark. And the reason I show this is just where the next level could be. You're sitting at about 60 cents higher before the market can break out there. Here's your Kansas City wheat futures. It's breaking out higher, just barely. But when you look at the December contract, it's not. Chicago and your corn futures basically not moving a whole lot there. And that's all I have.